Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary Safe Wheel Options Trade system for free. Uh, Please type in the chat that you can hear me okay. I want to make sure my audio is working and everything is working fine. So you guys give me that feedback. Will, thank you for telling me that you can hear me. I appreciate that. Also, be sure to post any questions that you might have. Thanks, Charles and Alex. Also, be sure to post any questions you might have. I want to make sure I get to all your questions before I end the broadcast. Okay, so let's get into it. Earnings Edge. What did I do last week? Last week I traded, what did I trade? AMD and made $496. You can see that here. Let me bring over this spreadsheet. Well, first let me show over the P&L. Net lick 10409. Right, so 10409. It was AMD. I think it was 496. I updated this. 23 wins, 19 losses, 8 break evens since inception. Since my last update, not since inception. So average wins 788, average loss 540, but I've got a little more wins than losses here. And what was my balance? It was 10409. So let me put that in here, 10409. And what is SPY trading right now? Looking at SPY, 514.40. 514.40. Oh, interesting how we're pretty much at break even there, or even with the S&P on nominal returns. So 2022, you can see vastly outperformed. 2023 underperformed with the earnings edge. And then 2024 year to date, pretty much right at the S&P, but this is way more volatile. So when the S&P has equal nominal returns, the S&P is outperforming on a risk-adjusted basis for sure. This thing has a lot of risk, this earnings edge. But you can see since inception, up 108%. And the S&P 500 is only up 8.3% since the beginning of 2022. All right, that is the earnings edge. The Premier Level 5. Let's talk about the Premier Level 5. This is kind of tricky putting this in here because it shows my account. So I kind of have to make it small here. Let me refresh it. So I'm trading this on Interactive Brokers. And you can see my account balance is 34,447. So 34,447. Let's go to the spreadsheet. It's over here. 34,447. Okay, so you can see here the Premier Level 5 still down about 2% this year, underperforming some. Again, get about 1/3 the drawdown, so on a risk-adjusted basis, still doing well. But the key with this is keep the drawdowns low until the time comes where I can start recovering. This was down around 5%, so I am starting to recover, but not outperforming the S&P yet. I think I have a good chance to do that this year. We had that long stretch of about 5 or 6 months where we only had a 2% pullback, and the PL5 doesn't really like that. It doesn't hate it or anything. It was only down a little bit, but yeah, bull markets tend to not do as well as the S&P, but sideways, grind downs, crashes, does exceptionally well, and then catches up and surpasses the S&P 500 over time. So that is the Premier level 5. Now, the other thing is the wheel strategy, but I was asked to show my account since it opened in 2022, the equity curve. So I'm going to do that now before I forget. So here's the equity curve for the earnings edge. So you can see it started with $5,000. When was it? The beginning of 2022, just at the end of 2021 there, had $5,000 in the account. And I just traded the earnings edge ever since then. You can see the equity curve there. Let me put in the equity curve for the safe wheel since 2022. So give me a second here to make sure that it's showing up properly. Okay, so the safe wheel looks like this. So you see I started with $5,000 right there in the beginning of 2022. And you can see the safe wheel equity curve all the way to where we are today. I had a pretty big move right here. Interesting. And here too. So I probably had a covered call. This is a situation where I had a covered call. I sold the call far out of the money and then I got assigned. So the stocks that I owned shot up. That's typically where this particular strategy bumps in profit. You can see I've been struggling a little bit lately here. So did I show the safe wheel yet? No, let's go into that now. Let's use let's see where my safe wheel. Okay, that's my. All right, so here's the safe wheel here. Let's look at the net lick 6354. Let's go into the spreadsheet. 6354. 6354. Okay, so safe wheel year to date looks like it's down about 1%. So underperforming here, but again, about half the drawdowns of the S&P. So you got to take that into account. Safe wheel's been struggling a little bit. You know what's interesting? What's happened with the safe wheel? Let me take this out of here and look at the safe wheel. What's interesting is both on LI is what I'm trading. And on over the weekend, last weekend, the thing shot up like crazy where I hadn't sold any premium over the weekend and just had the put hedge on, which lost. And then it happened again this weekend on Monday. So before I could come in and sell any premium, the put hedge is losing. I do have this long call right here, but it's not really going up significantly, only up 1 cent. So we're kind of in between there because my long call that I'll put on last Friday is at the 34 strike, and we're only trading around 29. Okay, so, and I did show my net lick right here. Okay. All right, so let's get into the safe wheel trade. I think I've showed everything I need to show. Showed the earnings edge, showed the Premier level 5. I showed the safe wheel. I showed the equity curves. I show the equity curve for the equity curve. It doesn't work for the Premier level 5 because it's options on futures, and for some reason the equity curve is just totally wacky with Thinkorswim. So there's no reason for me to even show it. So there we go. Now let's move on to, I'm actually going to trade now. Let's talk about the safe wheel and what I need to do. So first thing I'm going to do is check the hedges. Are they good? So one question for the put hedge, is it under 100 days? No, so it's good. And is it close enough within 70% of the actual price? So within 70% of the price is something I need to calculate. So let's use a calculator for this. So I'm using the 20 put. So 20 divided by 29.3, 68%. Okay, so it looks like I've got to move the put hedge up because it's not close enough. It's barely not close enough, but it's not close enough. So what I need to do with this put hedge is I got to move it closer. I know that if I move it just one strike closer, it'll be within. Well, I want to go to about to 80%. So let's see what we have here. We got LI, we got the September. So we're here. I need to roll this up. Where am I going to roll that up to? At least to the 80% mark. So let's see where we are. Currently trading 29.3 times 80%. I want to get it at least to 24. So where is it? I'm going to get it to 24. Okay, so I'm going to trade this 20 for this 24. Okay, so I'm going to sell this, 3 of these, and buy 3 of the 24s. So let's do that. So I'm going to right click here, create rolling order. So I want to make this the 24. And I want to make sure it's in September. Okay, so it's going to cost me a debit. I'm going to move this put hedge closer because it's not giving me the protection that I want. And I want it within 80% of the actual price. So the price has moved up pretty significantly, up about $4. And so let's see, I'm going to pay as little as possible. Now let's see here, moving this put hedge. I don't know how many times I've moved the put hedge. It's pretty rare. Maybe this might be my second time or third time. Okay, so I moved the put hedge closer. So now we got a stronger put hedge. Costs some money. So we have a little more potential depreciation, but we want to be close enough to protect. Next, I'm going to sell. Okay, and now I want to look at this hedge here, which I put on Friday. So this is fine. And it expires at the end of this week. So the next thing I'm going to do is run the traditional wheel. I don't have any shares, so I'm not going to sell a covered call. I'm going to open a new. I'm going to open up a new position or sell a put, and I'm going to do it in this expiration cycle, the one that expires on Friday. And I want to get at least 29.30 cents. I can get that here at the 28 level, and I like to go one closer, so I'm going to sell here at the 28.50, and I'm going to sell one, right? And the mid is 45. Whoops, 45. Sell one. Let's get this filled. See if I can get it for 44. Okay, so there we go. So now I've got my short put. So traditionally, I have my traditional wheel, then I have my hedges behind it. And again, sizing, I have between $5,000 and $10,000 in the account, which means that I am going to do one of the traditional wheel or 100 shares, possibly up to 200 shares. And I'm going to run 3 put hedges. And let's take a look at that spreadsheet again. How's this doing so far? Up 27%, where the S&P is up 8.3% approximately since the beginning of 2022. So it's still vastly outperforming. And then especially on a risk-adjusted basis, because you can pretty much times this times 2, because it's got about half the risk or half the volatility of the S&P 500. So vastly outperforming since 2022, underperforming year to date this year. Okay, good. Let's see if there's any questions. And a comment here last week. Oh, correct. Last week was Airbnb, not AMD on the I had my spreadsheet reset and I had to kind of scramble this morning to put it together. So yes, it was Airbnb. And what did I do with Airbnb last week? Thanks for letting me know that. Let's see here. Airbnb made $290. Okay. So $290 on Airbnb last week. That was the trade of the week last week. Thanks for letting me know. Kevin, good morning from Florida. Sometimes I wish I lived in Florida so I didn't have to pay the taxes that I pay here in California. Will saying something. Biden's budget for the next fiscal year proposes doubling the capital gains tax and taxing unrealized capital gains. Any thoughts on this? Most of my money is tied up in a 1256 contract, which means that all my trades come off within around 60 days. So I'm short term in terms of unrealized gains. Realized gains doesn't matter. I'm pretty much liquid in my account from that standpoint. And the 1256 contract allows me to, even though I'm getting short, even though I'm trading on a short-term basis I would normally get charged short-term capital gains, I get to take 60% of my gains and put them into long-term. And the fact that I don't have a lot of unrealized losses because by the time I get to the end of the year, I'm almost out of most of my trades. I'm probably only in a small percent of my trades. So if I have unrealized losses or unrealized gains, it's a very small percent of what I'm doing. So this, I don't like to increase taxes for sure. I'm totally against that. But this is actually good for my system on a comparative basis, compared to other type of trading styles. I'm not as affected by the unrealized capital gains tax, doubling the capital gains tax obviously is going to affect me, which is total garbage. And I don't know why this guy would think about doing something so stupid, but he doesn't understand when you take money away from people, it doesn't incentivize them to make money. And if they're not incentivized to make money, they're not going to go out and start businesses, and it's going to hurt the economy. And we're just going to be, the taxpayers are going to be on the hook for everything. And then there's not going to be any taxpayers left to pay the taxes. I don't know how they don't understand this, but he's a lifelong politician. He's been a politician since 1970. He has no idea of reality when it comes to business. That's just my opinion. Yeah. So to be or not to be, revealing your P&L, that is the question. William Shakespeare, okay. Steve-O, will he exempt middle-class homeowners from having their home equity tax? Yeah, I just don't get it. I don't think he'll be president. When is the election? This year? I don't pay a lot of attention to politics, but I don't think he'll be president anyways. I think that, you have these economic cycles that are coming up and down, and they really have nothing to do with the president, but they get caught. That particular president might get caught in that cycle, and then they get voted out. And that's probably what's going to happen. Some guy, ex-Labor government proposed the same thing in New Zealand, and they aren't in power anymore. Yeah, that's just, you just want to bring the economy to a grind. You can just increase taxes. Better wait for the election results than to think about possible problems in the future that won't come to realization anyways. Yeah, politics are just not my thing. I don't pay a lot of attention to them because I really don't have a lot of control. I tend to spend a lot of time on things that I have control over. and that's kind of my takeaway. But when they start to, I mean, I'm already paying over 50% of my money in taxes right now. I mean, isn't that enough? I don't think I'm getting my money's worth. But yeah, okay. Well, we got a kind of little off subject today, but if you guys want to talk a little bit about options, definitely give me any questions about options. That's what I like to talk about, and that's kind of where my expertise is. Do the dollar requirements for a wheel stock, okay, scale if the price of the stock is higher? Yes. Yes. So that's the reason why I trade stocks between $20 and $40 because I have the capital allocation done. So I'm between $5,000 and $10,000. And if the stock goes to $70, then I'm going to need more capital. But if you have maybe $10,000 to $15,000, you might trade a $70 stock, and you might just do one, that ratio of 1 to 3, 3 put hedges, and then 100 shares of the traditional wheel. So if you have more money, you could, instead of running a 2 and a 6, you might use a stock that's a higher price. So the answer to your question, a short answer is yes. Steve says the American Revolution was started over a 12% tax. Yeah, I think that the Americans today aren't paying much attention to that kind of stuff. There's a lot of stuff going on and thrown in front of them, and a lot of people aren't paying attention to it. I'm probably one of them. We've got other things to do. We're busy, right? We're busy trying to make a living, so we don't have time to revolt. So if they inch it up a little bit at a time, we don't really revolt. They've kind of figured that out. Charles, please show activity and positions for LI. Okay. Sure. There you go. There you go. So now you can see everything. Let me bring this out here. Yeah, you can see all the positions I have. Will, do you know anyone that thinks about managing risk and maximize returns as you do in the YouTube community or any media? I mean, there's a lot of what I call level 4 traders that trade and they do quite well, like the Tasty Trades or some of the guys trading that 112. But as far as being hedged, some of the guys in the Bertino group, those guys are kind of like me. But on YouTube, I don't think there's anyone else out there that really trades like me. They don't like that. They want the quick money, they want the easy money, and they're not worried about hedging. And we're going to have a crash every 3 to 5 years, and when the crash comes, then you're going to see where the rubber meets the road. But before that happens, they're going to be doing really well. And that's I haven't seen anybody really that is protecting their portfolio like I do. I can't think of anybody. Hopefully you guys, maybe you can think of somebody. Let me know who they are so I can check them out. And of course, my daughter wants me to go for the president for 2028. The dude says, after using a paper trading account for practicing options trading, what portfolio size do you recommend to start options trading with real money? $5,000. Yeah, $5,000 would be good to start, because you can trade the safe wheel with that. That would be best. I do have a free course. It's called Options from Day One. It's a pretty good course. You can learn options for free. And it should be in the link there. If it isn't, let me know. We'll call Carl for president in 2028. I don't really care about politics or want the job. Ends up blowing everyone out of the water. Yeah, I think you have to have a certain personality to get into politics, and it's kind of a dog eat dog situation. So it's probably not really about the skeletons in your closet. It's about how to expose skeletons in other people's closets, whether they're real skeletons or not. That's unfortunately, it seems like the way that it is. Okay, I don't see any more questions or comments, so I'm going to wind this thing down. One thing I always like to say, if the P&L is not real, what else are they trying to conceal? All right, I'll be back next week. I appreciate you guys.